So today is the 12th of December and we will have our weekly look at the Nifty once again. The last week when we looked at the Nifty, Nifty was at this point and it was going to break down from this channel. And this we had identified as a double zigzag or a corrective wave which was likely to be fully retraced, and we were looking for Nifty to make a new low. Well, Nifty did fall further about 200 points from there and made a new low in the sense that this was not a spike low, but this was certainly a closing low for the move. If you can see the daily chart, it will show that this closing low was the lowest low of this move. But what happened then? The next day, the Nifty just gapped up and started to go up with a lot of momentum. So looking back at that time, as soon as this Nifty started gapping up, we obviously covered a lot of our shorts because it was becoming apparent that this was the final wave down on the whole up move. And this appeared to be a slightly truncated move since it did not exceed this low. Now the whole move down, if you see, go back to the daily chart, it becomes more clear. So the whole move down. So on the daily chart, the whole move down appears to be a three-wave move, a double zigzag. And this looks like another WXY formation to the downside, which has now started to correct back up. So once we had this gap up, this formation appeared to be very clear and we started to make long positions in the Nifty as well as in individual stocks. And this price action here has closed above the middle channel line suggests that this down move is at least over for the time being. Now here let me digress a bit and let me tell you about the trading tactics that we need to follow when we do our analysis. If we are following Elliott wave, then we would like to track and trade the next wave, whatever is ongoing. We may have any long-term prediction or view, but that really counts to nothing when we come to trading. The trading has to be right away focused on what is happening now in the markets rather than what is likely to happen 2 months down the line. So with that in mind, we are now focused on this wave up. And now this wave up can have two options here. We can have two options. Either this wave up starts to make a new impulse and goes to newer highs, or secondly, it can make a X wave and then we have another zigzag to the downside. So in both the cases, we are looking at a wave up to at least about 18,000 levels in the current move. So it would pay to stay long in this current scenario for the time being. Obviously, you should have your stop losses and risk control very much in mind. So now going back to the minor time frame. So on the hourly time frame, we have a gap here, we have a gap here. So this appears to be a breakaway and an acceleration gap, and another consolidation and another gap and another move to the upside is expected in the next 2 or 3 trading days. So we are long on the market for the time being with the immediate target of 18,000 in mind. And let us see, once that target is reached, what do we do? So you need to have your stop losses. Again, I will have to repeat in this market, but the whole structure looks very, very positive. That's all about now. Thank you. Bye bye.